Cool. Well, welcome everyone. We are on, it's Tuesday night, we're here for some training, and we're getting a little psycho tonight in the good sense. So trading is very much all about mindset, and if you haven't figured that out yet, well, you're just too fresh. But it is I've heard people say that it's 90+% about mindset and the way that you're able to manage your own emotions and your mindset when facing the opportunity to click the button. So, even today, just happened to have a chat with someone. I'll keep them anonymous unless they want to identify themselves. But we had a good chat because along their trading journey, they know the rules. They know, and here's something for me which is similar. I'm a sucker for information. I love to learn about as many different things as possible. I love gaining information, but this is kind of a comment on the days that we are in. We've got an overload of knowledge, but a lack of wisdom. And so part of growing our emotional strength and mindset and fortitude for trading comes from actually getting face to face with the fact that we might not be as disciplined and patient as we thought we were before we started this trading journey. And so I can see the chat saying a few things there. Preach. Yep, there you go. Mike agrees with me. So this is the journey that we're on, guys. And so you can learn all about structure. I mean, I can tell you now, about almost 4 years into this journey, I have wanted to go down every rabbit trail possible, whether it's ICT or SC, smart money concepts or swing trading or all the different things. I've dabbled in a few of those and learned about Elliott Wave and Fibonacci and just picked up on things over the years. But there's some things I've just kind of ripped the handbrake up and said, you know what? I don't need to go down that track. I need to focus on what I know and rather double down on refining my mindset, which is becoming more patient, more disciplined, and focusing on that. Because you can bounce from strategy to strategy, get more info and more info, but at the end of the day, if you can't manage yourself, all of that's a waste of time. And so part of that conversation that me and that individual were having today was about patience. He understands the rules, he knows what's going on, but when this guy jumps on the charts, it is patience goes out the window, FOMO comes up like crazy, and the desire to click the button one way, then click the button the other way is there. It's the internal belief that the market owes me something now. I want to get on, I want to get off, and I want to move on with my life. And we all have that. But when we approach the charts, we actually got to zoom out and realize that they owe us absolutely nothing. They don't care whether we're there or not. When we click the button, we're not moving those candles unless you've got a really fat account, which you got to have very, very fat account to move those candles. And those are mostly brokers and banks. And so aside from that, we've got to realize that we are coming here to, I remember, one of our previous educators used to say with a scalping approach is smash and grab. We are trying to get in and get out of the market as fast as possible. And essentially that's one of the bigger differences between swing trading, which can look very attractive because you take one trade a week maybe, and then you just hold that thing and go. But the reality is the longer you're in the market, the greater the risk. And that's why we love the approach of scalping, because you are getting in and you're getting out and you're moving on with your day. And different mindsets will lean into different formats for that. But, really, during our conversation today, I said, you don't need to go and squirrel off learning more info. You need to double down on mindset. And so I recommended Trading in the Zone by Mark Douglas. If you are brand new to the trading space and you have not read the book Trading in the Zone, this is what it looks like. I'll share my screen super quick because I got it right here. I listened to it on Audible, so that is what Trading in the Zone looks like. You can get this on Spotify Premium, I believe, as well. So you could be listening to this right now, potentially already for free. If you haven't got an Audible account yet, I know that you can get your first book for free as well, I believe. So that's an option. And I'm going to read you a quote out of the book quickly that I have right here for us, guys, before I welcome Dad on to share some stuff. But here is something that I found recently as well. It says, The Impact of Trading in the Zone. Mark Douglas's book, Trading in the Zone, is a must-read for traders. It teaches confidence, discipline, and a winner's mindset. The book emphasizes thinking in probabilities, managing risk, and building mental structure. With real-life stories and practical advice, it helps traders avoid emotional traps and achieve consistency. If that sounds like your jam and what you need more of, type the zone in the chat right now. Because if anything, TRENDFORCE, our strategy that we're approaching is all about zones and alignment. And so what's the point in having an indicator that gives us all the source if we don't have the mindset to actually manage the trade? So if you have not read that book or listened to that book yet, cannot recommend it enough. It is like, I'm going to call it the Bible of day trading. Like, you've got to get that mindset into you. So enough of that. Zone. There we go. Get it, Tim. And honestly, if you have listened to it maybe a year ago, chuck that one back on, because you're going to get more and more out of it every time you lean into it. And you can go deeper, guys. You can get on YouTube and go Google into Mark Douglas, listen to his long seminars and things like that. You cannot overeducate yourself on the mindset side. I'll put it that way. But without any more, I am going to get over to Dad in a moment. One more thing, we are announcing at the end of the Zoom when our brand new MACD will be in all of your hands, so stick around till the end for that. Otherwise, I don't think I have any more announcements. Aside from that, let's dive into the next phase. So Dad, I'm going to find you, I'm going to pin you to the screen, and we're going to continue to rock and roll as soon as I can find you. Somewhere here, if you unpin yourself. There you are, gotcha. All right, there you go. Thank you for tuning in. Appreciate you as always. I get to see more of you than most, which I'm grateful for. But tonight, the rest of us are all able to hear some wisdom from you in your trading journey. So over to you, Dad. Thank you.
Cool, man. Well, thanks so much for joining us. I mean, wow, isn't trading fun? I was saying to Ty, we are chatting today just how much I love trading. Of course, I love teaching, educating too, and the programming side. But I tell you, what a great thing, that we're all on this great journey together. So I don't talk more a little bit about the psychology, maybe some of my own experience that I've been learning on this journey, because we're all learning. We're all learning and it does take a while. But I also wanted to show just a couple of things, just when I see something in the market that I've spotted that can be helpful and useful to us as traders, I like to pick it out. So I want to show just a little pattern quickly, one we've mentioned quite a bit that was very strong this morning. And oh yes, by the way, I couldn't trade this morning because my internet connection, my wireless kept going in and out. Eventually I phoned my provider, and that took me through some steps. And the problem was I hadn't reset my router like for 2 years. I had no idea you meant to reset it because obviously I turned it on and off, but actually there's a button at the back. You need a pin to reset it. And I tell you what, my internet speed went up like tenfold. So it was slowly getting slower and slower, just didn't do a reset. And I was getting warnings, I used the TradingView app that it was a bit slow. There's a little box, a little graph in the top right-hand corner. And so that fixed it. So maybe if you're struggling with slow internet speed, you haven't reset your router, there's a factory reset button at the back. You got to stick. I just got a paper clip and stuck it in to reset. That could really, really help you. Anyway, so I just want to show a pattern first. So can I just share my screen, Ty? Let's have a look here. Then I'm also going to answer 2 questions. We want to honor the people who answered the questions from last week. So hopefully my screen is coming out. But there's one pattern that I love that is helpful. Now, it's not directly part of the strategy, but sometimes when patterns open up, they can make certain trades and entries safer. I mean, the crazy thing about what's happening in the markets, they have come alive. I mean, the moves are huge at the moment. You see, these are 100 pip levels. I mean, just some months back, my 100 pip, honestly, that's what I used to set my screen to 100 pips about that distance, because that was like the moves. I just wanted to know the size of the candles. But I tell you, it's got so big, my screen almost looks cluttered. But there was a counter trend signal here at 8:20 this morning on the Dow. And if you followed, I mean, this ran for almost, I think almost, was it 200 pips? Let me bring my screen down. I mean, if you took from that counter trend signal ran up, yeah, when it went like you could say 200 pips, my safe target would have been the 233, almost 200 pips. Now, sometimes I'm hesitant. I don't take every counter trend trade. But in this case, there was one reason that made this one absolutely 100% sure. Now, already we know the counter trend signal is strong. There's a lot that's gone into the program language there. But I tell you, if you didn't spot this, look at this pattern. If you look over here at the turn of the trend, how did you know this was a reversal? We got a bearish, doji, bullish on the 1 minute, so in that area. Now that is generally a good indication, but look what happened at the same time on the 3 minute this morning. Look at that. There's a bearish, doji, and a bullish candle. So we have the same pattern happening on the 3 minute, but as the advert says, but wait, there's even more. Look at the 8 minute. You had again a bearish, doji, bullish on an 8 minute. Remember, the higher the time frame, the more accurate that these kind of patterns can be. So when you got this counter trend signal here at 8:20, you can see that was on the formation of the bullish candle on the 8 minute. If you look at the 3 minute, on that, there was already you on the second bullish candle for that. So always keep a lookout for that pattern. That's the strength of Hougaard candles. They're very good at reversals. So when I'm looking at counter trends, I'm always looking at also at the higher time frames to see, is that pattern present? And sure enough, it was. So that counter trend signal would have been a very safe. Generally, counter trend signals do carry high risk, but what made that safer was the bearish bullish doji pattern. And the same would also be for obviously for buys. For sells, you just look for the opposite. So just wanted to show that would have been a good signal to take. Then just a couple of other questions. Let me just flick to the 3-minute here. I want to answer Wayne's question. He had a very good question when I just need to move your pretty faces up to my monitor there. There we go. All right, so he asked a very good question. He said, when is it, too late? How late is too late to enter a trade? So I just want to go back. There's a good example of what I do. I mean, the simple answer is, let me just go back to Monday. I want to go back to Monday evening. Let's wait for this to load. Okay, so Monday evening, let's have a look at that signal. So, I mean, the obvious answer is when is it too late to enter a trade? Well, firstly, the obvious one is when you're too far away from the trading trend zone. So if you end up being too far away, for example, if you try to enter here, that's dangerous, that's dangerous, that's dangerous. You are miles away from the trading trend zone. I mean, remember, I don't want to reteach on re-entering a trade. I may mention it later. It's got to be a pullback, and the more it pulls back, the safer it is. And so it's too late. To enter on these kind of candles, there's no signal. Once you get down here, that's only going to cause problems. All right, so here, let's analyze this signal. So obviously this was before the open. That's why we had a bit of a stop hunt over there at 9 o'clock. That's the London Open. But if we took this signal over here, there were reasons why you may wanted to have hung back. And so you could have waited quite a long time. When I see the 3-minute, what I love, and you'll see the new MACD, I love to see for sells, obviously, bright red, and for buys, bright green. So look at this. This signal came at 2018. You could see price was in range. It was going sideways. So before that, what is price action? Well, it was very rangy. There was a very, very narrow range. So that could have made that signal risky. There's no reason why that couldn't have continued to go sideways. How did we know that price is going to fall? So in this case, I would have seen that signal, and then I would have waited. I'd be watching the MACD or the old the trend bar of the oscillator, much easier to read now. I would have waited until the first red. There we go. Can you see? At that point, 2103, that's when that went red and we see separation. So though that was like 15 candles later, that's 45 minutes. That wouldn't have been a late entry, because look, you're coming out of the trading trend zone, plus you've got your MACD now. We're going to announce it then when it's coming out, going bright red. So I hope that answers your question, Wayne. It's late when you try enter where there's no signal and you're miles away from the trading trend zone. Don't enter on those candles. You enter only when it's close, but it's fine to wait. So honestly, I cannot tell you how many times I wait for the bright red for the sell or the bright green for the buy. Then there was another question I thought maybe good to look. Let's just look at the NAS. Let's just look at the NASDAQ. The other question Brendan asked about the relationship between the M1, the M3 and the M8. So that's also a very good question. How does that work? So I just want to have a look at, let's just go back to this afternoon. Let's look at a time here. There was a good signal here. Now let's look at this signal. Analyze this signal. Here we got 1554. So let's just line up the 3 minutes for 1554 and also our 8 minute. And so I've realized this is how I trade. You probably see I've mixed my screens around to get the best fit for this color of my monitor. I know Ty has all three vertically, so I've got the 1, the 3, and the 8. But to answer Brendan's question is I look at all three all the time. Even if I'm on the 1 minute, I'm also looking at the 8 for confirmation for high trend. I mean, that old saying, I think I said a year ago, the 8 is my mate. I mean, I like it because it's a fib number, but I just find it gives very, very good confirmation. So what often happens, so basically, the main thing is if you're looking at all three, it definitely lowers the risk substantially. I mean, the 3 is often enough for the 1, but if you really want to be really sure and to make sure it's a low risk, high probability 8, I'm also looking at the 8 minute all the time to see what the trend is. Because often for example, with the trading trend zone, for example, if we were super strict here, we wouldn't have got two points for the trend zone. If you look at the 1 minute, it hasn't quite crossed over there. It's about to cross over. We'd presume it's crossing over, but we're just before the crossover on the MACD. On the 3 minute, on that candle, cool. We've got nice separation there. But can you see the 1 minute is still in sell mode? We can see the new MACD's got little signals for crossover. That's crossed over into sell mode. So we probably only would have got one at the most for trend zone. So when that happens and I'm unsure, I look straight at the 8 minute. So we're talking about the relationship between M1, M3, and M8. And for me, this is a no-brainer. I mean, there were good reasons to take this trade anyway. You got a signal with a boost. We can see when the 55 is bright green on a buy, that's a no-brainer. And of course, our MACD on the 3 minute has also gone bright green. So that was a no-brainer. But in terms of getting extra security, if you look at what's happening on that candle, you can see the trading trend zone on the M8 is wide and growing, definitely strong uptrend. Plus, at the same time, once the MACD is running parallel uptrend, that made it safe. So I don't know if that answers your question, Brendan. I'm looking at all three at the same time, and that helps me make good decisions. I never really take risks. If the M8's going in the same direction, I'd rather be patient and wait for a reset. So I just wanted to cover those questions. And so moving on to psychology, you've probably heard me say that trading is way more psychological than analytical. Initially it's all about learning the indicator and learning a strategy. When I first began to build indicators and experiment, I first thought, gee, I had a good buy signal, a good sell signal. I'm on my way to wealth. And then I couldn't realize why I wasn't making money. Then I realized I didn't have a strategy. So I had to kind of work out a bit of a strategy. And even then, I wasn't becoming wealthy because I realized I wasn't prepared in my mind and in my head. It's definitely, initially it's like obviously analytical, but then you have to learn to grow psychologically. You realize that in the long term, it's psychology that makes you successful. And that's why I say this every few weeks probably, that there's a good reason why 90% of people lose 90% of their money in 90 days. And I gave the reasons. I've now got a list of 6 things. They've got no good indicator. They've got no strategy, no ongoing training and education, no capital management, and then there's no patience and discipline, and also no community. But the patience and discipline is the psychological side. It's developing a strong mind, being patient and disciplined, not becoming emotional. And so there are many fears. That's the big thing that where people miss out on being profitable, is all these fears in trading. I'm just going to hone on one, but those 4 main fears, you've probably heard them many times. The first one is fear of being wrong. The second one is FOMO. I'm going to just dwell on that a bit before we move on. The fear of losing money. And the last one is fear of leaving money on the table. And I mean, that I know that was one of the questions. I don't know if it was Elise asked about, when do you get in, when do you leave? And that's a great thing about the new MACD. That is going to help you, substantially stay in trades longer and not leave money on the table, because you don't want to do it emotionally. You want to do it analytically and making sure that fear is not leaving you to exit too early or too late. Obviously, I'll talk about being a bit mechanical later, but I believe the new MACD is really going to help us in terms of not leaving money on the table. And that's why Tom mentioned, the one book by Douglas, but there's also, Best Loser Wins, also a great book. And that's also about staying in trades longer. So I've realized that, in developing the MACD, I've lost, hold it. Let me just shrink that quickly. You just filled up my screen. Oops. Let's get that out the way.
I just shared your screen so we could see you, because the recording will just be showing your chart while you're busy talking.
Okay, so what
unless you were wanting to still show your chart.
Okay, so what am I doing?
We can see you perfectly now, unless you wanted to, I don't know what you can see, because I just kind of hijacked.
I know, can you see me perfectly?
We can see you.
Okay, that's fine. Yep. Okay, so I talked about the fear of suddenly for no reason, my whole screen changed. That's okay. So I mean, the fear of leaving money on the table, I talked about Best Loser Wins. That's a great book too. And that's why I say the new MACD is going to help us. Because I said the markets have shifted. When we launched, I said to Tal, the one fear of launching TRENDFORCE when you did was the markets were going sideways. It was fairly quiet. There weren't big moves. I was happy with 30 pips. But suddenly, with Trump coming in and the decisions he's making, it's caused the markets to have huge moves. So before, 30 to 50 pips may be in a great move. Now we're looking at like 100 to 200 pips and even bigger. And so we don't want to leave money on the table. We want to take what the market's giving us, but sticking within the parameters, of a whole strategy. But I want to just focus on FOMO, fear of missing out, because that is a big one of the big fears. And it often happens. I mean, it happens. Let me say, it happens once a trade's begun, and you think if you don't get in on it, you're going to miss out, and so you make an irrational decision. I can honestly say the majority of my losses have come sort of in the middle of my trading journey. Were coming through FOMO. I would try and enter trades late, and that is, I've given the antidote already, is that the fear to FOMO is no late entry. You've got, that is one of the big rules. There's that saying, I don't know who originally quoted it. It's like catching a falling knife. There's no safe way to enter a trade late. I mean, you end up having to need a huge stop loss. If we just go back, is my screen not being shared now, Ty? It's okay, I don't need the screen for the rest anyway. But you will see, if you try enter a trade once the trade is moving, you need a huge stop loss. And I don't know how many times I've entered a trade, I've put a stop loss of 20, take profit of 40, and I get stopped out. Then I try re-enter again. It's still moving. I get stopped out. And the end, you get like 100 pip trade, and you've like minus 40. That's FOMO. That is FOMO. FOMO will really cause you to lose money. So you've got to be really strict about no late entry. And that's why when we had that last live event, the whole thing was devoted to how to enter a trade that's already moving. You have to wait for a pullback and wait until you get a signal. Never re-enter a trade unless there's a signal. And that's why we've designed this whole indicator with these. There are a lot of bells and whistles, but a lot of them give us extra signals so we can re-enter a trade that's already moving, like diamonds, like triangle up or down in the oscillator that are now in the MACD. We've added, of course, the crossover on the MACD, the MACD or the old oscillator going bright red, bright green. Those are all signals. And so I've determined never to re-enter a trade unless there is a clear signal. Because remember, all those signals are based on calculations that mean there's probably going to be an initial momentum boost that will enable you to get into a risk-free position. And that's the whole point. And so the key thing, because it's hasty, we're all learning psychologically. The big thing is patience. That's what we need to apply. FOMO, the thing to FOMO is patience. I know what it's like. I've been on live Zooms with other strategies, and people are posting, I'm up 20, I'm up 50, I'm up 40. And man, you just want to jump in and click sell or click buy. I tell you, it'll always come and bite you. And so FOMO will cause you to lose money. You have to be patient. There's an old saying, I put it in the chat, patience equals pips. And I can't remember, because obviously I take a lot of trade. They say trading is 90% waiting. And I think the other day, I don't know, I think I waited 2 hours for a trade, but it was 98% waiting. But hey, think about it. If all you have to do is sit and wait, and you can earn a living off that, taking maybe only one trade a day, that is worth it. And so that's why growing psychologically, growing in maturity, you have to grow in patience. I've said so many times that I thought I was a patient person. And that's the thing about trading. Trading will expose who you really are. You may think you're patient, and I still think I am. I've got, I've had kids and plenty of grandkids, and there are often reasons for me to lose my patience. But I tell you what, trading tested me like nothing else. You have to learn to sit on your hands. Don't re-enter once a trade is moving. Don't worry about FOMO. There will always be, this is what you need to learn. No, there will always be another opportunity. There'll always be another trade. And so just be patient for the right setups. That's what I'm looking for the right setups. I try not to re-enter. That's not my first choice to enter a trade that's moving. But again, if I do, I'm very strict about following a signal, waiting for a pullback. All right, so that's a little bit about FOMO. Just be patient. There'll always be opportunities. But I think the key thing I want to talk about after mentioning that is just really about the trading journey. I think, there's so much, how can I say, there's so much rubbish out there. People are trying to be lured and enticed into trading with the promises of quick riches, get wealthy. They'll put the indicator or some strategy that looks, they'll say 98% win rate. But I tell you, there is no quick route to being successful and prospering in trading. We don't want to lure people, entice people with what we're doing into our community, like with the carrots of quick bucks. We really want to be honest with you that it is a journey. There's a saying I like to say often that, trading, it's a journey. It's a marathon, not a sprint. I wasn't a sprinter. I was more 800 meters up at school. I ran a marathon once. I did long distance, but sprinting was quick. It was amazing. If all I did was sprinting, it would be great. It's over like, it depends how fast you are, 11 seconds, 12 seconds. It's quick, but marathons take time. And that's the journey. I've realized that trading is a journey, and you've got to enjoy the journey. You've got to see it as, that's why I know when we took our kids, Time May Smile on holiday, it wasn't just the destination. The journey was fun. You stop for a picnic, stop for a takeaway, you'd stop on the way. And, the journey was part of the holiday, part of getting to the destination. And that's why if you see trading as a journey, the growth, that's the psychological side. Not only will you grow in a skill, but you'll also grow in character. I mean, the stats we often mention that only 1% of people who become profitable in the first year. It means that 99% of people will probably be losing money. And one of the reasons why we established this community is to try and help traders become successful without losing money. I mean, people lose, especially wealthy people are the worst. They lose tens of thousands, sometimes, really tens of thousands in the first year, thinking this is a quick way to get rich. So, generally, our hearts, we're not here to lure people into any kind of quick, rich scheme. We want to tell you honestly that this is a journey. You need to grow in your ability, grow in maturity. And hopefully, look, we want to be able to break the mold. We believe we have a good indicator and a good strategy that will break the mold. We want to see people way profitable, than 3 years. That would be great. But it is a journey, they say. I've looked, researched. It's usually a 3-year journey. So hopefully we can speed it up. But it takes 3 years to get the experience to become profitable. And that's it, and I think it's worth it. Who would trust a surgeon if you needed, God forbid, if you needed your appendix out and you made an appointment, you got referred to a surgeon and he was 20 years old, you'd have a few questions. And if you asked him what experience have you got? And he said, look, I've got a whole year. I've read every single book. I've watched some really good gurus on YouTube and I think I can do it, You're going to back him. You're going to run a mile, a lawyer. You need, you've got some complex legal case and there's some young gun who's got zero experience. He's been studying for a year. He's at university. He says, look, I've been to university. I've read the textbooks. I've read the year 5 books. You're not gonna take him on. The same with the dentist. If you went, there was some teenager, pulling teeth. You're not going to go to him. You're not going to trust anyone with experience. And it's no different, with trading. There's no ways in 1 year that you're going to become skilled and profitable, make heaps of money. And that's why it's the psychological side, developing character and maturity. But I want to say it's totally worth the journey. Really, it is about financial freedom. I was thinking this afternoon, in what profession can you choose how long you want to work for? You can't do that. How many hours? Normally with most jobs, it's 9 to 5, you're in the rat race. Trading gives you the opportunity, that freedom of how long you want to work for. You can also choose when you want to work. You can work in the morning, in the evening, during the day. You can absolutely choose your work hours. You can also choose where you want to work from. Wherever there's an internet, you could trade in a cafe. You could trade on the beach. I've taken trades walking the dog. I don't recommend it, and there was some risk attached, but I took a live trade and I won that trade. You can also choose how much money you want to make. So the freedom. So what I'm saying, there's a price to pay, but I believe the journey is absolutely worth it. The potential of becoming a successful trader and how it can totally change your life is worth the sacrifice. And so really, it's a 3-year journey. I say hopefully shorter. And so I just want to mention mostly year 1 and year 2, just some characteristics of the first year. Because I've learned the hard way. I've made every single possible mistake. And so year 1, the first thing I did, I went live almost. Ty told me, don't go live yet, Dad, go demo. I wish I'd listened to him. The first thing, I went live and I started trading with risking 4% on every trade. And my first trade I won 20 pips on the Dow. I thought, man, everyone's lying. This is easy, 20 times 4, whatever I was trading at, whatever lot size. And then, of course, after that, I won, I lost, I won, I lost. And I mean, I just went backwards. In 3 months, I'd lost hundreds of dollars. I mean, there was no ways I was ready on a live account. And so in your first year, it's mostly demo. Really, you've got to really nail demo, get your win rate up, get confidence. I was joking once that people think the transition from demo to a live account is easy. Let me tell you, it's a completely different ballgame. There's a massive difference. I think I used the illustration of, going to a shooting range, a firing range. I spent 2 years in the army. We had to do compulsory service. So I spent 2 years as a soldier. We learned to fire. We had these amazing automatic rifles. That was fun. We went to the to the firing range, shooting range. And it was great. We lay down. It was quiet. We took our shots at our targets. It was no sweat, but that is what demo's like. It's calm, it's relaxed, you're not risking money. But when you move to a live account, it's like someone is shooting back at you while you're trying to aim at the target. It's a whole different ballgame. You're going to be ducking for cover, trying to get your shot in. You're probably going to miss most of the targets. So there's a big difference. And so I can't underestimate that it is a journey. Firstly, get really confident on demo. Log your trades. I'll come to that in a minute. And so basically, in the first year, I just mentioned, I don't know, about 7 or 8 goals here. The first thing is you got to learn the rules and how to follow and apply them. That's the key. Unless you apply the rules, you're going to be going backwards from day one. So it's really learning the rules and how to follow them. Then it's also obviously learning the indicator. At first, it does look like a Christmas tree. There are a lot of elements to it. And each one, I couldn't leave out any one because that's the way I think and I trade. I know some people may switch off a few things, but you got to learn the indicator, know it well, know what everything does. You don't want to have to think, oops, now there's a rocket's appeared. What does that mean? Or there's a boost, or there's a diamond, or now there's this green bar that's gone across it. Now it's changed to a red bar. What's happening? Those things you learn off by heart. You got to also learn the strategy. I said an indicator without a strategy is useless. We're really looking for low risk, high probability trade entries that are indicator signals and colors show flowing with the current trend. That is what we're looking for. We're looking to really flow with the trend. I know we got a counter trend signal that is pretty good, but first get confidence, with trend. And what else we're learning? Of course, we're learning patience and discipline. That is the real key. Even in demo, I often go on demo just for fun. And often I take a few clicks I never would have taken. I've got to stop that myself. So when you're on demo, you got to try as much as you can believe that you're trading with the big lot size. I love how Wayne has shared his journey, that he made some stupid mistakes and he set a goal and he's built back and he's got where he's wanted to go. You have to learn patience and discipline with demo. So well done to you, Wayne. I love your journey. If you keep up what you're doing, you're developing the right mindset. So all these things, if you try to do these, if you try to learn these things with live money, you will lose money. So you're also learning how to create and follow a capital management strategy. I was helping someone this week. They were busy getting set up. I just admire them for what they were doing. They really wanted to do it the right way. You're also learning to deal with small losses. Now, in your first year, you're doing a lot of demo and obviously small lot sizes, but you're learning to deal with small losses. Let me tell you, the bigger the lot size, it's great when you win big, but also you're going to get stopped out. You're also learning price action. There's no quick journey to learning price action. There's that saying, you don't know what you don't know. The first time I looked at a screen, there was another strategy. I thought, how difficult can this be? I counted all the elements. I thought this all makes sense. But, they're big picture things, that you don't see. I know that's where Tyron's very good. Look at his videos, the things we're taught and how he looks at the different, the times from all the sessions, Lux Algo sessions, London, Asia, New York, all those highs and lows. Those things take months and months to learn. Eventually they become subconscious. I remember TASS saying to me, he doesn't even think about it. He just goes there and looks. So that's what you're learning in your first year. You're also learning, this is the big thing, you're learning not to revenge trade. Oh my God, well, I was good at revenge trading. I didn't my emotions were not under control psychologically. I was not prepared. And so, you enter a buy, it reverses, now it's selling, you click sell, and then it goes back to buy, you've you're down 30 pips, and it went in the right direction you thought it was going to go originally. So you learn not to revenge trade, keeping your emotions under control. That's why we've tried to develop TRENDFORCE. We try to develop here a mechanical trading system. If you follow the rules, you can't revenge trade. It's impossible. Because if you follow the rules and you take a buy and it stops you out, and look, there's no indicator on the planet that is foolproof. The market will do things that you do not expect. I took a loss the other day. I took a risk. I got to say, I'm ashamed to say I broke the rules. I'd had 2 wins. I was waiting for my wife to get ready to go walking. I was just looking at the charts. I was about to press log out, and I saw 1 minute, 3 minute, 8 minute. Everything was green. The trend zones were green. There's 20 minutes to big round number. And as I looked, the candle went bright green. I pressed buy. There was no signal. And of course, it went the other way, stopped me out. So I got lured in. You got to be so disciplined. But I tell you, I learned from that. That was a massive wake-up call. I thought my emotions were under control, and I got bored, and then I gave some back that I earned to the market. But if you learn to follow the rules, you won't revenge trade. If you're trading with trend and there's a buy, you get stopped out and it starts moving the other way, you won't press sell, because there's no ways you're going to get a sell straight after a buy. It's highly unlikely. So basically, in the first year, you're really learning to get to the point where you can make unemotional decisions, whether to enter a trade or not. And so you become increasingly more mechanical and not emotional. And that's the psychological side. Emotional traders will just get whipped along. They'll get lured into the stop hunts. And so you've got to get to the point where you're not double-minded about an entry. And the real test of whether you got your mind in control and you're understanding the indicator and the strategy is if you don't take a trade that meets the rules, you're also breaking the rules. Maybe I need to say that again. So you know that you've mastered the indicator and the strategy. When a signal comes, and if it meets the rules and you don't take it, you're breaking the rules. All right, so you've got to be so clear that if it meets the rules, you're in and you take it. So basically, you shouldn't be double-minded about an entry. It should be clear. That's all we've got is 4 rules. We've tried to make this strategy, although there's a lot to the indicator, we try to make it the rule simple, that either it's on or it's not on. We're looking for those low risk, high probability trades, 3, 4 out of 5. I try to just go for 4 out of 5s, but some 3 out of 5s are good. And so in the first year, you shouldn't be risking big lot sizes. Don't make the mistake I did. I'm not poor. God has blessed me, and I thought this is a quick way. And I tell you, I had to eat humble pie and start all over, go back to demo, go back to small lot sizes, and slowly, build up again. So in your first year, you shouldn't be risking big lot sizes. Every trade, if you've got no experience, every trade you win, if you're not experienced, is just luck. That first trade I took when I first went to a live account, that was luck. I didn't have a clue what I was doing. I saw buy and I pressed it and boom, it went up. I remember once I came, I even put it on an old feed. I just saw this big green candle. I pressed buy, I made 50 pips. I put it on the feed. I called my wife, come, look what I'm making. She came and had a look. And I saw I made 50 pips, but I tell you what, that was just luck. It was absolutely luck. I had no idea. So I'm saying in year 1, there's no shortcut. You're learning all these things line by line, step by step. So you shouldn't be risking big lot sizes. And so basically, if you haven't lost a lot of money in your first year, you've got to count that as a win. I'll say that again. If you haven't lost a lot of money in your first year, that's what we should count as a win. So the goal in the first year is not to make money. It really isn't. If your goal is to make money in the first year, you're going to end up losing money. So it's being methodical, learning all those things that I've mentioned. Then year 2, things do begin to shift. Now, for some of you, year 1, maybe 6 months, maybe 9 months, and maybe 18 months. There is no formula. All of us are different. All of us learn differently. And not all of us have the equal amount of time. Some of us may have hours in the day to trade, learn, etc. Some of us may just have an hour, hour and a half less time. And so whatever time period it takes you, it's not a reflection on who you are. There's a lot of factors, and we all learn differently. We all shape differently, so that first year, it may be different, maybe quicker, maybe slower. But in the second year, we're now learning to further develop our trading skills, where we gradually increase our lot size. And that is the key word there. Don't increase it too soon. That's the big thing is So many times you think you've got it, you get a winning streak and then you want to double your lot size, double it again. And before you know, you look at your account and you've gone backwards. You've got to learn to preserve your capital. So we gradually, in year 2, we're now getting confident, we gradually increase our lot size. But I tell you what, the rules, this is the key for me. The rules, when you start increasing your lot size, they've got to become part of your out of our subconscious. We just look at a chart and instinctively, that's what I do. I just look at a chart. Of course, Ty and I have developed the rules, so we know them well. But I just take one look. So sometimes if I see a setup, I just take one look and everything says no. I just know subconsciously. So before you start increasing your lot size, the rules have to be part of your subconscious. You can't thinking, what's T for, what's A for? I know the first S is for space. What's the second S? Before then, the trades moved along and it's a late entry. And so I can't say enough, you have to learn the rules. That's the discipline of trading. We're also starting to deal more with fear. And that's the reality is you can't learn to deal with fear in demo. So in the first year, when you are mostly in demo and trading with a small lot size, if you're trading at 0.1, I'd always advise people, start trading at the lowest lot size of whatever instrument you are trading. And so if you're at 0.1 and you take a 20 pip loss, you get stopped out on the Dow, that's only $2. That's not going to break the bank, But I tell you what, fear increases when your lot size increases, and that's what they say. Bad decisions come through fear. And fear comes from trading with a lot size too high for our ability. So I want to say that again. Bad decisions usually come through fear, and fear comes through trading with a lot size too high for our ability. And so that's the real key, is to follow the gate system. Preserve your capital, PYC. That's the key thing. Once you start, moving to live trading and you're increasing your lot size, you have to follow the gate system. That's why I've modified the one that I learned initially. So each gate has got 3 levels. You go through methodically. And if you follow that, you should not lose money. Anyone who's losing money, with TRENDFORCE, I will happily chat you one-on-one to see what's going wrong. Because if you follow in that gate system, if you're not following it, I'm not going to take your call. But if you follow in the gate system, 3 levels, you're trying to get a minimum of 30 pips at each level before you move up a gate. You start at 0.1, then maybe 0.2. If you go slowly and methodically, you should not lose money. Because basically it's amazing. I've just learned from experience. You get happy with a lot size of 1, happy with a lot size of 2, you get comfortable with 4. But as soon as it increases, I tell you, fear becomes a thing, because you start thinking, flip, this is going backwards, and your mind is calculating through the maths. And so I cannot emphasize enough that the second year is the journey of learning to deal with fear and learning to trade, slowly increasing your lot size until you become confident. And so again, the best important part of year 2 is stick to that gate system, move through the levels, be honest with yourself, go backwards, go forwards. Eventually you'll find, I know from experience, you'll find yourself stuck at a certain lot size, and you need to stick with it until you get confident, then slowly increase it. If there was a quick way through this journey, we would have discovered it by now. Someone else would have. So what are we learning in year 2? We're learning not just patience and discipline, we're learning more patience and more discipline. As you move to live trading, as you move to increasing your lot size, more patience and more discipline. We're learning, as I said earlier, we're learning how to manage our capital while increasing our lot size. That takes skill, patience, and discipline too. So we're managing our capital. We're not jumping up too quickly with our lot size. We're following the gate system. We're also learning more about price action. That's why it's a long journey. Price action, learning how the markets work. There are patterns I've seen. A common pattern I love. That's why I'm so looking forward to daylight saving in New Zealand, when we can trade, from 5 to 8 or 5 to 7:30. Because there's a pattern that's very common. Often at the open, then will be 1:30, price goes up, then price goes sideways, price comes down, and then around about 7:30, there's this great move up again. I often wait for that last move. And when you begin, now that didn't come overnight. It took me months and months and months to recognize that pattern. And when I see it, I learn to wait. So I see price goes up, price goes sideways, price comes down, price goes sideways. I don't turn off my computer and go away, because I know what's happening is accumulation is taking place for a breakout. But those things take time. And it's not every day like that, but the majority of times, often that's how things work on the NAS and the Dow. And so we're really learning in year 2 to trade without fear, affecting our entry and exit decisions. So we're learning to get our emotions under control. So as we grow in our second year, or maybe I should say season, because maybe, your first season is 6 months, maybe you're brilliant, your second season in trading, but there's definitely, three kind of seasons to trading. So we're learning to trade without fear. We got to learn to press buy. I'm getting there. Look, I'm still growing myself, but I'll go to the point if I'm taking a 3-minute trade, I press buy. A year or so back, if I pressed buy, my finger was on the mouse. It was on the close the trade. I was following it. Man, my heart was beating. When it pulled back, my heart stopped. I was still learning, but now I've learned to trust the indicator, trust my decisions. I click buy. I set my take profit. I'll go get a cup of coffee, get a banana, etc., etc. I'll come back and have a look. But if you like watching every candle with your finger on the mouse, that fear is still controlling you. So it's second year, getting your emotions under control. But the key thing is you're learning how to deal. I'm going to not say much about year 3, but I've got another 5 minutes to go. So you're learning how to deal with slightly bigger losses. That's the real key, because once your lot size goes up, it's inevitable your losses will go up. And I think I shared once, I was vulnerable how, I entered late with another educator on another thing. He said it's going up. I entered up and I had my lot size big. I mean, I lost. It was my biggest loss ever. I felt I couldn't eat breakfast. I didn't want to tell my wife at first. I mean, I felt sick. I felt the whole day it messed with my head. It's because I was trading with a lot size way above my ability. I broke every rule. Didn't have a capital management system. I was really gambling. That's what you are. You're gambling. If you're trading with a lot size above your ability, it's like gambling. You're living in hope. I shared that too. Remember, I'll say this quickly, that often your losses, they come in groups of 3. Statistics have found that. Because I remember I joked one night how I think I was on a good winning streak. I'd won 6 in a row, and then I made 1 loss, another loss. I made 3 losses in a row. I thought I've lost my mojo. 3 losses in a row. I went back to demo. On demo, I won I think 7 trades. Went back to live, and seriously, I lost 3. I went back to demo, and then I did it. I had a cycle of 3. I had no idea about this, that your losses come in clusters. And that's why if you are still in the early journey of trading, it's good to halve your lot size when you make a loss. Because generally they say, statistics show that after every 8 trades, you're highly likely to have 3 losses in a row. After 16, you may have 4 in a row. It doesn't mean you'll only have 4. You may have more losses than 4, but you get 4 in a row. And even after every 32 trades, you may even get 5 losses in a row. Now, that can drain your capital in no time. So if you're still learning, once you're confident and you've got a high win rate, keep your lot size where it is. If you're at the maximum, we don't risk more than 2%. That's the basic rule. But it's always good to halve your lot size. So especially in second year, you're not, again, trying to make big money. In second year, you're breaking even and you're starting to move ahead. You got to preserve your capital. I've got 10 out of 10. Once I think my best was 14 trades in a row. And I got quite arrogant when I told Ty, but I tell you, that was luck. I sent him a photograph of my trade account. I tell you, that was luck. That shouldn't have happened. So that's why runs of good luck. I'll end with these few more thoughts. Runs of good luck are bad. Euphoria is released and you lose your judgment. You think you're invincible. You begin to risk more than 2%. You enter late. You take big counter trend risks with no signals. And that's why they say most traders go bankrupt after a run of good luck, not a run of bad luck. So all these things, this is the psychological, side of trading. So in your second season or second year, if you follow these kind of things I'm saying, you'll start breaking even, you'll start moving ahead, you'll start to grow your account. But don't expect once your account grows, follow these rules, halve your lot size with losses, because you're not going to make big money. You will go too far backwards if you think you're invincible. And finally, year 3, I won't say much, but in year 3, you've learned patience and discipline. You're managing your capital. You're growing in knowledge of price action. You're not allowing losses to derail you, and you start to become profitable. But I tell you, all the thing is a learning journey. Often you only learn through loss. My biggest learning things I've done has been when I've lost money. And so losses, unfortunately, the pain of loss is part of the journey. You can't get around it. But if you follow our strategy and the rules we get, you will minimize your losses and also minimize your pain. So hopefully, I think, Ty, that's more or less what I wanted to share tonight. Hopefully that's been helpful and will help you on your journey. And so that's all for me, and I'll hand back to you, Ty.
Dang. I think you can all join me, and there's comments coming in like, this is such amazing advice. You can see Kat saying that, Christopher saying value, Jordash is saying so good. Dad, thank you. Like, there are so many pieces you said there that we could bunny trail off and go into more detail on, and we will. Like, and guys, we're here for the long haul. We're not just here for one Tuesday night, and this is a journey, like Dad said. So I see more just saying thanks, amazing, really, really cool. So guys, hopefully tonight gave you a handle on the fact that it's never always going to be rosy or perfect or a bunch of unicorns jumping up the chart and filling your trading account. That's not how this game works. But it is all about getting really honest with yourself and just zooming out and going, what are my habits? Like, how am I approaching the charts? Like, am I following the rules? Have I actually learned all the rules off by heart? That image that I've posted in our group chat, you should all have. If that thing's not on your desktop or at least burned into your brain by now, there's your next job. So just ask yourself, like, go over your notes from tonight, and then go over, hopefully with a highlighter, and go, which area am I strong with, if you need to encourage yourself first, and which area am I got a learning growth opportunity. I like the hero sandwich approach, probably just the words of affirmation person that I am. So I like to remind myself of the progress that I've made to maintain my strong mindset. And then I go, okay, here's where my growth point is. So whatever that looks like for you, I know we're all different, but I can see the chat's moving. So keep mindset stuff coming, strategies for how to combat specific fears. Cool, Marcus, we'll keep that in mind. Thank you. Then it's so good, Ty. Is there a chance you could please share the gate spreadsheet? Yeah, I'm sure we can figure that out. We went through, I mean, Dad actually created one live in front of everyone on that one session. So I think it was called risk management on the YouTube channel. So if you're watching this on YouTube, drop down lower. It's called risk management.
It's under YouTube. I went through it very slowly, methodically.
There we go. So, and on that, like, it shows you exactly how to even create your own. So that'll be even more powerful. And you can follow that. And we will eventually create like a stock one everyone can copy and follow, which we've had in the past. But otherwise, team, hope you enjoyed that. The MACD, the new MACD we are going to release. Trust me, we'd love to give it to you right now. I'm going away with my family over the weekend, Friday and Monday. I hate sharing new things while I'm not around because you have no idea how many questions pop up. And I don't want to be on my phone all weekend with my family. So Tuesday, this time next week, you will all have the brand new MACD with our original TRENDFORCE oscillator built into that puppy. So 1 week to go and you guys are all going to get it. And then the bonuses of that obviously are, if you're on a free TradingView account, and you don't have, you can only have 2 indicators instead of 3, you're going to get away with 2 now because we've basically turned 2 into 1. And as you can see, it is working. It performed so well on gold this morning, like so well. That trade, I'm still humming and buzzing about. Yeah, anyway, it was good. So guys, we will make that happen for you all next week. In the meantime, in between time, enjoy the rest of your week. Trade safe. We will stick with, oh goodness, yeah, Friday morning this week for our live analysis. It worked super well last week, moving from Thursday to Friday, so we're not trading the middle day of the week. And yeah, guys, in the meantime, keep firing feedback at us with what, in either personal messages or group chats, whatever's working for you, whatever you need, whatever you have questions about, drop questions in the group chat. We look at those every single day, make notes of them to turn them into sessions like tonight, things like that. So otherwise,
don't forget, we do 5:30. We're going to do 5:30 on Friday because of the new lunchtime.
Right. Thank you. You'll get a little bit more sleep. So instead of 5, we will launch at 5:30. Elise loves that. There we go. Because the lunch break is now currently between 5 and 6. Is that right? So that gives us half an hour to get assimilated, read everything, see what's up. I mean, this morning it was moving already before 6, but we'll get on at 5:30. I'll drop that in the chat on a reminder on Thursday night for our Friday morning, and then we'll rip into it on Friday morning at 5:30. All right, guys, enjoy your week, and we'll catch you all in the chat, and trade safe. We'll see you soon. All right, thanks, Dad. Thanks, everyone. Good night.